Thank you, everybody, for being here with us today. My name is Sandrine Bardot. I'm going to be your moderator today. I am the, what am I? Am I the practice lead for ECAP Rewards based in Dubai? We're a consulting organization specialized in compensation and benefits. While we are doing the introductions, please do share in the chat where you are joining us from. And I see some names that I recognize here. Hi, Dirk. And in the meantime, I'm going to introduce our panelists. I'm going to start with Pavitra Venkatesh, who is the Global Head of Reward at DAR. So Pavitra, if you could introduce yourself briefly, please.
Sure. Thank you, Sandrine. Hello, everyone. Yeah, there are some of my team members as well here in the chat. So yeah, hi to Kalyani, and I think I'm not sure if Mansi is there. Anyway, yeah, so I am compensation and performance management head for Dal and Handasa. We are an engineering firm, been in reward for almost 20 years now. Worked with Atkins, which is another engineering, Serco, another UK company. And then the last one before that was partnership with PwC as their Middle East consultant for compensation and benefits. Yeah, been doing compensation for 20 years. Looking forward for this chat today. Thank you.
All right, thank you so much. I'm going to continue with the ladies. Suzanne. So Suzanne Cunning, she's the Executive Director of People and Culture at Emile Wolf at the moment. Please introduce yourself.
Thank you, Sandrine. Good morning, good afternoon, good evening, wherever you are. It's a pleasure to be here. My name's Susan Cunning. I'm Scottish, in case you didn't notice yet. And I have been working in the world of people, culture, reward specifically for 27 years. Wow. And more than half of that has been in reward. And I have been in this region for around 15 years. My experience has predominantly been in financial services, banking, more recently energy, and also professional services.
All right, thank you so much. Suzanne, and last but not least, we have Enad Abu Nasser, who's the Rewards and OD Director at Vision Bank.
Thank you, Sandrine. I'm really glad to be here with you today. My name is Enad Abu Nasser, and I've been in the HR domain for quite a while now, and mainly focusing on total rewards and workforce planning. Currently leading the total rewards and OD function in a digital bank, a new digital bank here in Saudi Arabia and Riyadh. Most of my experience maybe has been in the GCC in different industries, from FMCG to automotive, and now in the banking and financial sector. So looking forward to the discussion today. Thank you.
All right, thank you so much. Before we dive into the main content, I have a little bit of housekeeping to do with everyone. So first of all, I want to encourage you to use the chat to interact and engage. Just make sure that your messages are sent to everyone so that we can see them. If you do have questions, please use the Q&A panel. We will try to address top questions live, and if we have some remaining questions at the end, we will write a follow-up blog post about that. You might see the red button, which indicates that the webinar is being recorded. All people who have registered will receive the recording after the event. And we are together for the next about 55 minutes, including the Q&A. If you face any technical issues, please try to reconnect or use the chat to reach out to our support team. And before we get started, I want to mention and give thanks to Semos Cloud. So our session today is hosted by Semos Cloud, which is a leading provider of total rewards and employee experience solutions. Their platform helps organizations across the GCC and beyond to design personalized, impactful reward programs that align with national workforce goals and evolving employee expectations. Especially in regions undergoing rapid transformation like the GCC, Semos Cloud supports HR teams in modernizing rewards while honoring local context and strategic priorities. So this is the official spiel on Semos. I want to add a little personal thing. I got in touch with the people there about 1.5 years, 2 years ago. And I'm so proud because I was the first podcast guest on the Semos podcast. I also did a webinar with them a while ago. And what I like about the platform, to be honest, this is unscripted, sorry, but is that I found that as there are many providers, in the space of total rewards, which help us to do our job, what I try to find is partners and providers that have a little bit of a difference compared to everybody else, because it's so easy to be cookie cutter. And what we try to do, I think all of us around this, I was going to say table, this virtual table, we try to deliver customized solutions to our clients, whether they're internal for Enad and Pavitra or external for me and Suzanne. And it's important that we find providers who have the same kind of ethos, and Semos is like that. So enough for the advertising. We will dive into the main content today. So our topic today is how GCC companies are rethinking total rewards in 2025. We thought it was important to discuss this topic because of all the changes that have been happening since COVID. Also, at the economic level, the uncertainty that we have been facing since January is also making a lot of organizations rethink what they can do in terms of rewards. We have more focus on nationalization programs, more competition in the marketplace for talent, which kind of like at one time brings salaries down, but at the same time we have talent scarcity, which brings salaries up. So we are all facing this kind of difficult environment. So we're going to start with a topic which is a very common topic of discussion in this region. And I would like to start talking about incentives and why some incentives sometimes fail and what can drive real behavioral change. So my first question I'm going to ask to all three of you, maybe starting with Suzanne. So in your experience, if you have like the most common reasons why incentives fail to drive the intended outcomes, if you can, with a specific example for GCC, or if there are any kind of economic or cultural factors that can contribute to this, and then we will move on to the other panelists.
Sure, thank you, Sandrine. So let me give you some high-level one-liners about why I think incentives fail, and of course, Enad, Pav, please chip in, and then we can maybe go into some specific examples. Stop me when I get to double digits, please. I think not understanding the need for sure, and of course this is generic and it's not specific to this region, but really not having clarity on the problem we're trying to solve for, and often treating symptoms rather than the root cause. I think another reason in particular here, based on my experience in a number of different countries and parts of the world, I think specifically here it's magnified around not designing incentives in the context of your overall pay mix. I don't know everyone else's view, but I think that's a common issue, but I've felt it more working in this part of the world for the last decade and a half. Also, data integrity, something we talk about all the time, and organizations trying to design incentives around some performance measures that they can't measure and they don't have the data for. I think that's a very prevalent issue in my experience here. What else? Definitely a lack of alignment between performance period and the payment cycle. So these are quite detailed, specifics in terms of when the performance cycle is, and then when any payment is made. So if that is monthly incentives, for example, because it's a retail business or it's a bank and it's credit cards, whatever, something that's got the life cycle is much faster, but then it takes 3 or 4 months to pay it. That is when they really fall down. I have some other things, but I'll let the team chip in, and then maybe we can go into some specific examples.
Yes.
And obviously challenge my thinking if you don't have, if you don't agree with some of those examples.
So Enad, do you want to add anything?
Sure. I think in the region, and since I was maybe handling the compensation and benefits in multiple countries in the GCC, I always, in everything in HR, I say that the most important thing is communication. Mm-hmm. I think poor communication and lack of transparency in how incentives are being built and why they are being designed this way is, I think, a key factor in having ineffective incentive plans, because at the end, people want to know really why they need to put their efforts and why they need to achieve that specific target. They need to feel or give them a purpose behind what they are doing and the effort they are putting. Maybe another thing is which is something I think supports what Susan just mentioned, is how much and what's the level of pay we're setting for the variable components of employees' salaries, which here we're talking about the pay mix approach and strategy we're following. Because, for example, and currently we see this in Saudi Arabia, in some startups, they focus too much on fixed pay, which I think can limit the performance and the delivery and the motivation of employees. And on the other hand, I think some mature companies, they rely heavily on incentives and on variable pay, which I think they have products that are already in the market, well known in the market, and they don't require that aggressive sales tactics from the sales team. Another factor, and this is the last factor maybe that comes to my mind, is that for example, for the sales team, currently we see it as the normal practice to incentivize them like 40, 50, or 60, or even 90% of their salaries, which I believe needs to be dynamic based on the stage of the life cycle of the company. If we are in a startup, we can really rely heavily on the incentive, and we are mature or declining in some business lines, we need to change our strategy and our approach.
Pav, anything you would like to add?
Yeah, I mean, everything which they spoke about is completely valid. The extra 2 points which I have are complexity of the scheme rather than simplicity of the scheme, right? The only way, depending on, again, organization strength and what we are doing, finance, fintech, perhaps, or if you work with investment bankers, you can afford to make it a lot more complex. But the more bigger organization is, there is a much need to make it more simplified, make it more relatable, make it more, I mean, goals is one of the biggest things which we have seen in this area, where there is in this region in specific, where there's a lot of work need to be done to drive performance in the companies. It's a mixed bag for us in the region. There are companies who are multinationals who already drive performance, and there are a lot of companies in the Middle East region who needs a lot of work on performance management. That is something which I see as key in making an incentive scheme work. If it is not simple, if you can't articulate in a minute, if you need spreadsheets for everything, then I think we lose the plot there. So that is one. The other one is for high performers. making sure incentive drives performance, if that is your key. I mean, that should be the key. How do you differentiate high performance? What's in it for me to contribute more to the company? And if that is not big enough, there are some incentive schemes which I have seen where there is only 10% or 15% uplift from a average performer to an excellent performer, right? So that differentiation also becomes very key in not only just making sure the incentive scheme is alive and working, but it's also driving performance. That's where we add the value as compensation professionals, where we define what is the difference between who's a high performer and what is the difference of in earning compared to the mass, who are very important. They are people who we need. And I keep saying performance is always relative. There will always be 15% who are high performers. It does not matter whether the company did 100 million or 100 billion, right? Because end of the day, company is trying to drive performance with incentive scheme. Yes, you might think that you're contributing more, but if that's a good performance for the company, then perhaps that is a new average.
Yeah.
Right. So hence it becomes important for us to make it meaningful every year and making sure it is relevant to the company and where they're trying to head towards.
Yeah. I will add a little bit on something. I think what I find in this region is that we have a little bit of a syndrome of groupthink. Companies want to benchmark, and by benchmark, it means they want to know the content of a standard plan and apply it to their company because it feels safe. And it's good to show to a board or to a CHRO or CEO, or we're doing the same as company A, B, C, D, and E, or the major organizations in the region. And I believe this is absolutely the wrong approach. You need to have a plan which is absolutely customized to your current situation. So even the plan that maybe was working 2 years ago, you might have to review 2 years later because your strategy is changing, your org design has changed, the role of people has changed. So I think that's one. Another one on, let's say, traditional corporate bonus plans, which I will include in incentives, though technically they're not an incentive. One thing that drives me crazy, and that ties into the performance management approach. We say to line managers, 3 to 5 objectives is the ideal number. So we force them, we design a system where they can only put maximum 7 objectives, but then what they create is 20 sub-objectives weighted at 1 or 2% each underneath that. And I'm like, if your person is paid 10,000 dirhams a month and they get 1 month target bonus, what do you think this represents? Are you really motivating somebody? Are you driving behavior? Are you driving change? No, you're not. And the tool is not here to manage the employee on your behalf. So for me, those are two things that are quite important into why the plans may or may not work. So maybe if somebody has an example of a plan that was working or maybe not working, depending and driving behaviors, who would like to share first?
I can share one, Sandrine. Oh, Pav.
Go ahead.
Okay. I'll give you an example of a large bank that I've worked in the UAE. And this is a successful example, but of course there's always learnings, right? And this wasn't just one incentive scheme. It was overall reward and part of that an incentive scheme, but short-term and long-term. But I want to talk about what were the underlying principles that made it a success and what we were trying to achieve. So what we were trying to achieve, it was a huge ambition to be the #1 bank for customer service in the UAE. So customer service was the most important thing, no matter what. And that was the view of the board, it was the view of the senior leadership team to differentiate us in the market. And of course, lots of employees who are front-facing and customer-facing had lots of objectives around customer satisfaction, customer focus, and so on. But we took the view that everyone in the organisation had to have a number of customer service KPIs within their scorecard, or whatever you want to call it, objectives within their performance management process, or whatever. And there was a minimum of 30% for everyone. Now, of course, dependent on the nature of your role, that could be 30, 50, 80, or whatever. Now, also because it's a bank and because regulation is important and governance is important, then you need to have measures around risk, and you need to have measures around audit and compliance and all of those things. So very much a balanced scorecard approach that we would talk about. But the reason that I wanted to highlight it, because it was different and it was successful, because it was part of the strategy. There was a very clear purpose. Everyone was bought into it. It was a culture change, and in some areas a behaviour change. You know, if you think about corporate functions and roles that weren't customer facing, then of course they have customers, of course they have their internal stakeholders, but it maybe never, I'm talking however many years ago, wasn't part of their core objectives. And so that was a change for people. And it wasn't just about let's change some KPIs, let's change some objectives, let's weight them differently and change our incentive structure to ensure that we reward for that performance and that behaviour we're looking for. It was also a culture change, and that was the point I wanted to really make, because Enad talked about it in terms of communication, and Pav, you talked about simplicity. And that's what we had to make this, how we communicated it to people, how we upskilled line managers to ensure that they were encouraging that behaviour every day, no matter the role that you did, no matter who your customers were. And of course, then we had to have the reward structure that sat around it and rewarded the right behaviours. But one of the key success factors was all of that stuff that I just spoke about, but also the data and also the measures. How are we going to measure that? And we had a full task force and a committee actually about customer service and getting the KPIs, the measures right, the data right, so that we could actually measure that properly. And it was a huge success. But it was a culture change programme, not just about incentives and not just about pay. And I think that that's when it has most impact. And it's very clear line of sight between the strategy, the business outcomes desired, and then in turn, the performance that you're trying to drive and the behaviours that you're trying to encourage.
Yeah, thank you.
Happy to take any questions from the other panellists or any more detail.
So, Enad or Pav, would you like to share an example, or do you?
Yeah, if you allow me.
Yeah, sure.
Okay, go ahead, Enad.
Please, Pav, please.
Okay. Let's go. Okay, let's go. We hear your examples, and then we'll move on to the rest of the topics. Okay.
Yeah, sure. So I'm very similar approach to what Suzanne was talking about. This was a company which was in oil and gas back in my PwC days. Oil and gas and a mix of retail as well, because they have their petrol stations where there is retail coming in and things like that. That was the very interesting mix for the kind of company I was operating to. What they were having difficulties was the team were given a sales incentives in retail, and they were constantly, they were achieving targets, but collaboration was lacking in the company. Because they were constantly fighting with each other, against each other, trying to get the best scores for their sales, which did really well to the company. But as they mature, it was really helpful for them when they were growing. And as they become more stable and they wanted, you know what, let's bring employee experience together and let's work towards a larger goal for the company. And they wanted to change that behavior while trying to still drive revenue and while still driving customer service. Now, there were multiple facets of issues here. One, their revenue model was not straightforward. So they couldn't articulate what it meant, although sales people had their sales target, but it wasn't easy for the middle management guys to have that revenue target, because it was too cumbersome, or it was too complicated revenue model. And it was not easy to say this comes only from this particular individual, because it was a group effort end of the day. Yeah, so there was a lot of work we tried to do to understand how revenue models were, and not every time it works out. So this is one classic case where we said, okay, revenue model works for the country, but we can't anywhere distinguish or segregate it any further other than at country level. So we decided to have revenue model there, and for the large workforce who were on the ground, on the retail ground, trying to sell stuff, for them there was customer rating and as well as the targets which they had previously and trying to bring it. What we did was we added for the supervisor and above, we added something more collaborative, which is we for supervisor, although they have a piece of the work to do, they'll be given the revenue model for the country for them to anchor on, saying that this is a team effort. We are trying to go together rather than you thinking what is your team and how much did they achieve, right? So it was a journey for 2 years, as I heard from the client, and for them to firstly implement it, digest it, and understand how it works. And second year is when they had huge, what do you call, along with other team building initiatives, other engagement programs which they were doing, incentive scheme really helped them drive the behavior of team culture, while continuing to work with customers, continuing to do good with revenue. So that was a good example and a success story from redefining and reviewing the scheme. Again, I mean, one thing which I would highly recommend is every 3 years, 4 years, review the scheme, irrespective of what happens, because we lose the finesse, we lose, I mean, there is no time where we stop, think, and understand what has happened in our company. Is it still relevant? And then change it. Completely agree with your point, Sandrine. For me, benchmarking is a starting point. It's a really great starting point. You can start there, but see what you can do differently for your company, for your audience, for what you want to achieve in the company, rather than saying this is benchmark, Apple does it, Netflix does it, so therefore do it and it will work great for us. No, it doesn't necessarily do. Get it. It's important benchmark to know at least you're not going completely opposite. It gives you some context, and from there build upon and make sure it works for your company. Yeah.
Thank you, Pav. Enad?
Yeah, so I think one of the incentive plans that we worked on back, I think in 2021, where we linked the direction of the business, the top priorities of the business that was changing at that time, with the lowest level like sales team who are interacting on daily basis with the customers. And the change in the top priorities was to focus more on the customer experience and the customer happiness. So that didn't happen just on focusing on, okay, what's the satisfaction rate, and that's it. So what happened is that instead of focusing only on a single KPI, we identified all the areas around that KPI that maybe employees might overlook or sometimes misuse or even manipulate, and we have seen cases like that, in order just for them to hit the main target. And building on these KPIs, the approach, the main idea was to protect the business from maybe unintended consequences or even unintended behaviors that may be focusing on one KPI that is only number of deals or number of deals closed, to really encourage people to do or demonstrate the right behavior, not just the results. So maybe focusing on multiple KPIs that are let's say, affect the main targets that we need to achieve was something really successful for the company, supported achieving the long-term targets for the company, not just this month's sales or next month's sales. So it's about focusing on the long term, on the retention of customers, rather than just achieving this month target to get the payment out of it.
Yeah, interesting. I think what you all have highlighted is kind of this necessity to align the KPIs to really what the business is trying to achieve in the short term and the long term, and to make sure there is a line of sight for the employees who are on that incentive so that they understand how they can impact and how they can contribute. And I think another thing which is quite important is this aspect of driving a change in behavior takes time. It's a cultural change. And one of you talked about a journey. I think the word identifies the situation very nicely. If I want to transition into our next topic, one of the things which is a little bit unique about the GCC market is this unique makeup of organizations that we have in the region. We have government entities, semi-government entities, and fully private entities. In the private entities, we have a huge overrepresentation of very large family-owned conglomerates who can span dozens of countries and quite a large number of different, very diversified verticals. And so what we see is a pickup of activities such as merger and acquisitions, IPOs. We see generational change at the top of the family-owned companies moving into second or third generation. And so I would like to ask about how, if you have any insights to share about how we can adapt our total rewards framework for a company that is undergoing such a big change. It can be growth, expansion to new countries, and so on. I'm going to start with Enad because I started with the ladies on the first one. So this one's for you, Enad.
Yeah, so I think mainly in the GCC region and specifically in Saudi Arabia, there is a huge support for the entrepreneurial sector, let's say, for startups and tech startups mainly. I think in recent years, we've seen the strong shift towards long-term incentive plans to support the effort of organizations to maybe retain their good talent and high performers, especially maybe using the stock option plans for their employees. A very interesting maybe figure that I've read recently, that 70% of Gen Z candidates would turn down a job offer if it doesn't have or doesn't include the purpose-driven incentive plans. And this is very huge. And currently, Gen Z are becoming they are a big part of the workforce today, and it's getting bigger every day. So we need also to consider this shift and consider this a huge shift in their mindset, that they want to feel part of the organization. They want to feel like owners in that organization and to see really their contribution recognized in whatever they achieve or help the organization to do. Another thing, I think, since we see also in Saudi Arabia, the government is encouraging private companies to go IPO. I think the way how we reward people can be different from pre-IPO to post-IPO. I think pre-IPO, the focus might be more on cash or benefits, while when we look at post-IPO, there is often a shift to equity, to incentives, more focus on variable reward and and recognition, that definitely needs to be aligned with the investor expectations and also the regulatory compliance. Because I think, and maybe Susan has an experience in the financial and banking sector, the regulatory compliance plays a huge role in ensuring risk mitigation and having risk mitigation techniques when it comes to variable compensation.
Yeah. Thank you so much, Enad. Pav, would you like to share an example?
Yeah, I mean, one of the examples I have is when a CEO changed to one of the multinational companies I worked for. It was interesting. It was one of the business CEO, not the overall CEO. When it changed, the company highly focused. It was focusing on employee experience and then how they build momentum with the employees and how do they increase performance. From that, I think it's also the market which had a huge impact when the CEO got changed, or MD rather, in my terminology. So MD changed, and this was the time when the particular sector was struggling to meet ends, and the competition had increased, and it was causing issues with our bottom line, basically, right? So for a company, I mean, we all have to acknowledge one thing: employee experience comes with a cost. Employee engagement comes with a cost as well, right? So one of his biggest objective for him when he was bought on board was to increase the bottom line. So I think we were in single digit somewhere, and increase it to even to the market standards. That was his challenge given. Now, the problem was that that particular business was not like paying P90 or P75 or even P50 for that matter, right? So trying to drive costs down while doing good to the company, and as well as trying to retain people, was the biggest challenge, right? The sector wasn't it's the same story across, right? But we had to do something, and what we ended up doing was trying to set standards at every level. What is the level of living we need to make sure that people have? We have such sectors across Middle East, right? Whether you talk about facilities management, whether you talk about service industry, there are a lot of industries where people struggle to meet ends. And for me, that's been one of the most challenging, morally challenging as a CNB person, trying to cut cost for people whom we think or that they are really struggling to meet their ends. So we had to come up with innovative solutions to make sure that we reduce it while we are trying to give the best service to the client. We had not just salary, we did look at salaries and see who are the top payers, what is the requirement for us to continue to have them. Is there anything we can do? We can move to the other part of the business while trying to retain them, or is there any other markets we can target where we can bring people in a reduced cost, while also look at head count, right? One of the things which we keep hearing is when the cost cutting exercise comes in, we said, okay, let's cut everybody's salaries. Like, hold on, there can be a lot more efficiencies created on money rather than just reducing salaries, right? That's very short term and short view in my experience. If you look at headcount, if you look at the capacity and the productivity range, there is a lot of headcount which we can address to. That doesn't mean fire everyone either, right? So there is a balance which we need to take, and there are multifaceted approach when cost cutting came. So although he came on board, it's a different CEO, but I think it's more market which changed. So therefore, we had to rebalance and reprioritize things to make sure that we are still relatable and still can make some amount of money and keep the business floating. The question is, would you have the business floating or would you close down the shop? What's more harder, right? That's a moral dilemma in such situations which we go through. It's a difficult situation, but I think we balanced out well. I think it doubled the profit which they did, while we had to let go of few people, and we had to what do you call it, move from one business unit to another, replace and move them somewhere else to who can take up the job and do something else in some other sector. So yeah, so that's one example, which it's not a completely positive example, but it's more realistic in terms of change which we go through here.
And I think it's important also that I always joke, right? As Total Rewards people, we always have a job, because in good times, CEOs tell us, oh, our people are leaving, please help us with the retention. And in bad times, it's like, help us manage the costs. So we're kind of the lucky ones who always get to work. But joke aside, I think, it's important to also acknowledge that transition is not always easy to handle, even if it's an IPO. But for example, after a merger and acquisition, it can be a difficult period in terms of cultural alignment and so on. So it's not always something really easy. So I'm going to move to maybe Suzanne for the last example on that.
Sure, I'll try to make it quick. So spoken about IPOs, we've spoken about leadership CEO changes. The examples that I have are around M&A activity. I've been involved in quite a lot of M&A here in the region, from pre-due diligence, right through to the whole integration and transition. And in one organisation, after the deal had actually happened, maybe about a year afterwards, and they were still going through the integration, and the alignment of all things reward, never mind all things people and culture, is a webinar on its own. So I just wanted to share a few small examples about some initiatives that I've done in the organisations I've worked in that have gone through M&A activity. Sometimes a deal bonus for day one, and the nice thing about doing some reward initiatives based on an M&A deal is that you have clear line of sight on the outcome, you have clear line of sight on the timeline. So dependent on the nature of it, you can decide what you pay out on, for example, legal day one or day 100. As an example. If it's more about an integration bonus, then you'll have some key measures around what does the successful integration look like. And it could be some cultural things, it could be some risk, compliance and governance things, like Enad had mentioned, in particular in regulated environments. And when you're able to tick those boxes, assuming you have the data and all the other things that we've spoken about, then you can pay out. The one huge consideration, I think, is the power dynamic in an M&A. Is it a pure merger of two equal parts of two organisations that have equal power, if that makes sense? Or is there one dominant player? Or is it more of an acquisition that's been wrapped up and positioned cosmetically as a merger? All of these things will impact on how you do it. And what you need to be careful of, and as a reward person, that if there will be that power dynamic, and that you're not isolating employees or leaders in the organisation that's maybe either viewed in reality or perception as the underdog, because that can be really demotivating for the non-recipients of any transaction deal-based reward. Lots more to say on that, but I'll leave it there, Sandrine.
Yeah, I'm gonna complement with an example from one of my clients. So this is a company that has an aggressive growth plan, and which is planning to have a substantial portion of its growth coming what they call external growth, which means company acquisitions, right? Merger and acquisitions. And this organization did not have any due diligence done whatsoever of the companies that they were acquiring. So I entered the company as a long-term on a long-term project as a consultant. This is not what I'm supposed to work on, but falls on my lap in the middle of the project. We've acquired this company, and can you help us to find out CEO compensation data. Now, that is in a very different country from the GCC. I'm not going to say which one. But where there are thankfully lots of publicly listed organizations. So I'm like, sure, so let's hire a company to get, CEO pay, executive compensation data. And they tell me, no, there is no budget for HR. So I'm like, how am I supposed to help you do that? So eventually I found a solution. I went to publicly listed companies. I tried to go for the lower side of those numbers. I mean, we were able to figure something out. But this made me realize that they were not planning to do anything. So I'm like, but guys, in your due diligence, what did you find in terms of pension liability, for example? And they were like, what do you mean due diligence? I'm like, did you do any HR due diligence, component due diligence?
Too much to ask, Sandrine.
And they were like, no, why? And I said, oh my gosh, you're so lucky that you've acquired a company in a country where their pension system is only defined contribution. So you don't have like employer liability in the long run. But if you had acquired a company from, let's say, the UK, where they had old employees and an old defined benefit plan, for example, you might have liabilities in the hundreds of millions of dollars or more, and you don't have any idea. And they were like, no. So I said, okay, please, for next year, try to budget to have a due diligence to be performed, even if you need to hire an external company, because yes, it's an investment, but the risk that you're taking. So I think sometimes what we have, as reward people, we end up at the end of an exercise and we have to put the pieces together, and we should have been involved from the beginning to participate in that due diligence, to ask those questions, to help evaluate. And there isn't yet always this kind of maturity in all organizations to get there. So it's just to say a little word of encouragement to fellow rewards people. You're not alone when you face those situations. We have seen them as well. We have seen them as well. Okay. So everyone, I see that we're advancing in time and we have done only 2 of our 4 topics. We will not have time to cover everything. So I would like everybody in the chat to quickly vote for which of the 2 topics which one we're going to cover. So we have topic 1, which is AI analytics in the reward strategy. So if you like that one, please write AI. And the last other topic is what our CEOs and CHROs are expecting from total rewards leaders. So write either AI or CEO in the chat, please, so that I can try to see which one people prefer. Of course, it's like mixed.
Let's talk really fast and try and do both.
Answer. Oh, CEO is coming.
I think a lot of, okay, what we're going to do, we're going to talk about CEO, and I'm going to discuss with Semos if we can do another webinar another time to discuss more on the other topics which we haven't had time to cover. So let's talk about the expectations from the business, the CEO, and from the CHRO about from total rewards. We have seen a lot of change in the economic environment, especially since COVID. The change in the labor market, which I briefly mentioned at the beginning of this conversation. So how do you find, all of you, that the expectations have or haven't changed? Maybe it could be as well that there are some things that are remaining very important. And I'm going to start this time by Pav to be the first one to answer.
Sure. I mean, to be honest, I don't think majority of how we run business has changed. End of the day, every company, even charity organizations, right? They need to make money. They need to have their revenue for their initiatives. We have to talk about bottom lines. We have to talk about return on investment. All of this stays intact. What has changed post-pandemic is a lot more on how employees feel coming to work every day. Right? It's more than resource saying, I need 1,000 people and they all need to come and do this job every day from 10 to 6, to moving from what can I do more for employees? It used to be a lot more arbitrary. I mean, yes, of course, there are a lot of companies who have done a great job in that. But in this part of the region, it was like, yeah, what more? I mean, you get salary, right? Good deal for you, right? Move on. From that, I think pandemic hit it really hard for people to say there's a lot more to life for employees rather than just coming and punching in and punching out. So there's a lot of conversation on well-being in the region. There's a lot of initiatives, and as well as the softwares which are available, vendors who are trying to sell well-being. And I think it's coming to a place, and again, one of the things which Enad mentioned, Gen Z's requirement, right? I don't think it is limited to Gen Z's, it's everyone have realized that work is not the end, right? I mean, there are stories which we hear that, I mean, it keeps coming up on LinkedIn as a reminder every time, that when you're on deathbed, you don't talk about the presentations you did for the board, right? You talk about your people, your loved ones, and how you lived your life with them, not the presentation, not the Excel sheets in our context.
Yeah.
So there's a lot more attention towards how do we want to make it more accessible, uh, more humanize the workforce than while we also concentrate on revenue, bottom line, how much money we make, what is the value add we give it to customers. All of that is still there, but just with a little more attention to employees to say we need to also take care of them, we need to treat them better, we need to give them equal rights, and HR having table on the board meetings, which has been a recent development in this region. Um, and they actually partnering with the business people to make sure that that gets implemented throughout the organization. So I think culture and engagement are the big focus after pandemic to make sure that it is consumable to all the employees as well. So that's what I think.
Yeah, very good point. Enad, what's your point of view on those changes coming from CEOs and CHROs?
Sure, I 100% agree with Pav. Maybe since the pandemic, the expectation from maybe the CEO and CHROs have shifted, and they started maybe asking different question. The question is, what can we offer beyond just money? Because currently, and according maybe to a recent study from Gartner, 76% of employees believe that compensation should include more than just salary or money. They even during tough economic times, and I personally believe that especially during tough economic times, our reward package should include more than just money. And to be honest, this is not an easy question to answer, but we have many tools out there to help us to reach to an answer. And also, maybe one of the trending plans that we see, or reward plans, as flexible benefits. And this is something we see in many organizations here in Saudi, and it's becoming really trending. And we've seen solutions also supporting the implementation of such a plan that will eventually speak to the whole person. It's not about just providing them with a salary at the end of the month, but also maybe investing in their physical wellness, and their health, and their financial wellness, and their maybe being flexible at the workplace. And when I say flexible or flexibility, it's not just about remote working. It's about being flexible in everything we do in HR, and how we interact with our employees, and how we execute some of the practices in HR. And maybe that's why currently the market is changing, and copy pasting just reward plans do not work anymore. Because even if we are working in two organizations with the same business model, in the same industry, with the same maybe financials, with the same headcount, at the end, the culture we have, the environment we have internally is totally different. And how I see culture is about how people interact with each other. And if one employee changed in that team, definitely the culture, the environment, how they interact will definitely change. And we need also to be let's say, clear on how to measure the change in the workplace, in the environment, and in the culture, how people work with each other. And from there, we can understand what they really need, so we can maybe provide them with more flexible benefits that supports their life, whether they are maybe starting a family now or saving for the future. So we need also to be flexible and go beyond just money.
Yeah. So quickly, Suzanne, because we're getting to the end of our time. So I don't know about you. I can stay a little bit longer, but people might need to leave. So
okay. I won't take it personally if anyone leaves whilst I'm talking, but I'll try to be quick. I won't repeat anything that Enad and Pav have said because it was very insightful and relevant. So let me just take a slightly different lens on this and look at it from the perspective. I agree with everything you've said, but just to add different sort of angle. If you think about CEOs and CHROs, what are they looking for from us? What are they looking for from reward leaders and more generally HR leaders who also have responsibility, you know, for reward? And I have a stat here from Mercer 2024 Global Talent Trends report, reported that 75% of execs, so C-suite, now view total rewards as a core business enabler to business strategy. Yeah, and that's quite recent. And it was a big sample. So what is our role and what are they looking for from us? I think that the days are gone when a good, strong reward person is just about data and just about numbers and just about the financials. I think that it's much more about understanding the business, your commerciality, understanding what we're trying, everything that was spoken about today. And CHROs are looking for us to turn that, you know, into the story. They're looking for us to come up with options based on that data and be able to paint a picture of what that looks like for the board, for the remuneration committee, for the other senior leaders in the organisation. So I think that for us as reward people, we need to have many more tools in our toolbox these days, and probably for the last 7 years, but I think that that's more and more and more. And as you become more senior in your role, and if you stay in the reward path, then it becomes even more important to progress because you need to be able to articulate all of the wonderful numbers that we have at our fingertips and all the beautiful presentations and data that we do into that meaningful narrative that tells a story to those that you need to hear it to change their behaviour, for those who need to understand it to make a decision, to approve something, all of those things. Yeah, so that's my take on what do CHROs and CEOs want from us.
Yeah, one of the things that I see from the lens of being, you know, an outside consultant, and that will maybe tie into a little bit what Enad was saying. We see more and more clients who come to us and say that they want to come to a boutique consultancy because they want customized solutions. They don't want to copy paste, that they feel that sometimes maybe the bigger consultancies, if they are working on some massive projects, might not pay as much attention to a kind of a relatively smaller organization, especially like in Saudi with PIF backed organizations. There is like a lot of focus by the big consultancies over there. And I think this is something we were not hearing a few years ago. And it also shows a shift and an awareness in the market that you need to have, as I was saying earlier, something which is fitting with your current situation in the organization, and to understand that it might not be a permanent solution. I don't think total reward solutions are designed to be permanent, but that's also for us as professionals, I think, an opportunity to show a little bit of creativity, to offer new solutions. So I remember a client to whom I offered, you know, a very standard vanilla plan of a corporate bonus, because they specifically asked me do something which everybody's doing. And then I said, well, you keep talking about sharing the success, so let me offer you a profit sharing type of model for your employees. And it's very, very rare in this region. It held interest for a while, and then eventually the client said, okay, vanilla plan is not working, but we would prefer something more along the more traditional lines. But at least they were open to having the conversation. It doesn't mean that every time you have a chance to explain an idea, a new idea or a new concept, it's a win, I think, for the organization. It's a win for the total rewards function, because it shows that we can adapt and evolve as the organization is evolving itself. With all that said, if people need to leave, please feel free to leave. But if some people want to stay to have a Q&A, happy to take those questions. I don't know, from my fellow panelists, if you have another five minutes to share with the audience. We have one question in the Q&A. It's a little bit off topic, but I'm going to read it nevertheless. Incentives and benefits have declined because roles are increasingly filled by individuals from lower paying countries willing to accept lower compensation, making it harder for UK-based professionals to compete. What advice would you give to those in the UK looking for roles in the GCC and specifically Dubai? I'm going to start on that one. I do agree. Yes, there is more competition in the market. More people want to move to the GCC region because it's seen as a dynamic area and an area of growth. I think what really matters is that for any candidate who maybe is aspiring to a more like type of expertise-based position or senior position in terms of position in the organization, it's important to identify what makes you unique and the value that you bring, and to be able to demonstrate this uniqueness and this value add in terms that the organization is then going to say, okay, I have maybe other candidates, but how do I differentiate? Or this person is different, and maybe that's why they need to be paid a little more. So it's not necessarily linked to where you are coming from, but more about your individual profile, trying to reposition yourself in a way that demonstrates value to the business. So it's not necessarily just about your technical skills, it's about what it brings to the business. That's what we do as rewards leaders. We try to bring value to the business. And if you want a job, that's what you need to demonstrate that you can bring to the business. That would be my first answer.
And Sandrine, just to add to that, I think that everything you've said, I agree with, but also it's not as easy as I'm not saying it was ever easy, but
yes,
it is much more difficult now, right?
yes,
I think anyone thinking of coming from anywhere, including, I think the person from the UK or any other part of the world, if you do not have experience in this part of the world, you will find it super tough. Gone are the days where you didn't need, regional specific experience. Now, if you've maybe been in the UK or Singapore or somewhere else, and you have been aligned to, and you have a business here in the UAE and the broader GCC, then fine, because you have some exposure to the culture. But I think the cultural dynamics and the nuances that you learn working here, you can't read a book, and you need to have that experience. Now, I'm not saying that's right or wrong, but that is the reality of the situation. And I would caution anyone that was thinking of coming to this part of the world without that experience, or indeed without a role, because it is more and more and more competitive.
Yeah. I mean, I think that's one thing.
I don't want to end on a low, but I would. But it's
sorry. I agree with both of you. One thing is, as a market, it's recalibrating.
Yeah.
It's become a lot more expat friendly. It's on the map everywhere, right? So therefore, it's only natural for Dubai or even UAE for that matter, in 1940s, if you talk about, it was really difficult to bring people in. right? Because it was not something which people knew about. It was so-called hardship, but now it is not anymore. So, and it will only continue to happen, whether irrespective of where you are from. There is competition across the board. There are people who will take salaries less than what you think you should take across the board.
And they will have experience in the market as well.
Exactly.
A lot of the time.
So it's not an easy market to enter at all. I mean, I completely get that, but at the same time, it is nothing to do with where you come from. It's where you're placed and how you will sell yourself.
And also your expectation of either your market value, where you are right now, and your perception of what that might be in this part of the world. All of those things.
A friend who is here for 20 years is not going to get same salary as someone who's going to enter right now. So it's different scale altogether.
Yeah.
All right. Okay, well, I have to cut short now because we have gone above our time. I'm sorry for those of you who asked additional questions. We will handle them through a blog post. We will come back to you through a blog post answering those questions. So follow up, please follow up. And I'm hoping to, as I was saying, to have another conversation with our friends at Semos to see if we can do another webinar to discuss the topics we didn't have time to cover. There was a lot of good ideas. I think it was great. Thank you very much to all three of you, Suzanne, Pavitra and Enad, for sharing your examples. I think this is one of the things which is very often missing in conversations. We talk a little bit general, so I think this is really valuable, and I look forward for everybody to watch the replay and follow up with us. I see that Semos has shared our LinkedIn profiles, so don't hesitate to reach out to us if you have any questions. Thank you very much, everyone, and see you next time.
Thank you.
Thank you.
Yes, thank you so much. Take care. Bye-bye.